Okay, hopefully everyone can see that. So yeah, as Lee said, we're going to talk about rethinking the sector. We're going to talk about how mergers and acquisitions has a role to play in that. So I'm John. Stephan do two things, I think, really in the firm. One, I lead our international mergers and acquisitions practice, and two, for 25 years, similar to Lee, actually, I've focused on the building products and services sector. And Mithun.
Morning, everybody. My name is Mithun Patel. I'm an M&A director with BDO, working with John and leading the building products and services sector. I've been involved in M&A for the last 12 years or so, and have had taken roles as a corporate development director at a FTSE 100 PLC, and my background is a chartered accountant. And very good to be talking to you today, John.
Okay, so we're just going to a couple of things first on BDO very quickly. So we're a professional services organisation. We work with owner-managed businesses, private equity-backed companies, large corporates, so the whole spectrum within the sector. What we think unites that is working with ambitious companies, working with companies that are entrepreneurially spirited and looking to grow. We've grown quite a bit ourselves over the recent years. We're now just around about 5,500 people in the UK. And as you can see on the right, we're part of a much bigger organisational international operation. Next slide, please. So in terms of services, we're really made up of three parts. We've got audit, which I'm sure most people will be familiar with. We've got tax, and then we've got advisory. And advisory covers a number of the segments on the wheel on the left-hand side there. So business restructuring, corporate finance. In terms of corporate finance, we are very much in the mid-market. So we sort of call that transactions up to, from 5 or 10 million, sort of up to 100 million, 150 million of value. We're a market leader in that. Year after year, we're very prominent in league tables. And on the right-hand side, you can see some of the statistics associated with that. Next slide, please. And then just to give you a quick sort of flavour for some of our clients, again, it covers the full spectrum: owner-managed businesses, private equity-backed, larger corporates. And here we've just divided up them by subsector within building products. And yeah, there's lots of companies that we've worked with over the years. That's BDO, just to position us. And now we're going to talk about some of the recent trends and then our rethink model.
Yeah, so we monitor the sector quite closely, and we look at a number of indicators in the market to assess what the market has been doing and where potentially are the opportunities. And it helps us position businesses that we work with in terms of M&A deals. The graph that is on your screen right now is our building product share price index. So this is the amalgamation of the share prices for all the building products and services businesses in the UK, rebased at 2009 levels, rebased to 100 in 2009. What we see here is a sector which is quite resilient post the financial crisis. There's been a decade-long rising of sector value. Even during the Brexit process, the negotiations with the uncertainty, it's been fairly resilient throughout that period. Just before COVID hit, we were seeing an increase in value of the sector. Relationships that we had up and down the country were reporting very strong order books and positive outlook for the future. Clearly, the pandemic hit, and as with all sectors in the UK, there was a sudden and sharp decline. But what we've been very pleased about, impressed with, is that there has been also a very strong recovery after the COVID hit. Initially, it was a V-shaped recovery, but it's turning into more of a kick-shaped recovery, which is in line with some of the some of the expectations from the CPA as well. I think the recovery has been helped. It's been helped by the RMI market in particular, which in turn has been helped by the government interventions and what that has done to demand. We think that although we're very impressed with businesses in the sector who have reacted to the pandemic, put into processes, change business models to cope with the potential new normal going forward. In the short term, we think that Q4 this year and Q1 next year, we do see that as a bit of a test for the sector for obvious reasons, and clearly the Brexit uncertainty will continue until then as well. This next slide gives an indication to us the level of confidence in the market, in the building products market. And the way we look at that is these are the analyst estimates for listed businesses in the UK at different points in time. The blue line here is the analyst estimates for 2020 and 2021 in January, back in January before COVID hit us. And then you can see the orange line, which with the analyst estimates in May, and we saw a sharp decline in confidence because of the pandemic. But however, with the theme in August, that confidence has returned slightly, not to the same levels as January, but we are seeing an increase in confidence in the market. As of last week, that confidence has relatively remained, although again, the sort of second wave or the increase in cases will have an impact on confidence levels going forward. John?
Yeah, so thanks, Mithun. Just move to the next slide. So coming into COVID, we were having lots of discussions with clients about how they were faring, how they were coping, and that led us to have a think about how we could put that into a framework to further those discussions and dialogue. We came up with the diagram that you can see on the slide now, which we called our Rethink model. We tried to make it very simple as a way of just thinking about how businesses can adapt and develop as we go through the situation that we're in now. So over on the left-hand side there, you can see what we term the react phase, which is the sort of shorter, sharper red shape. Where we all had to go through that. You had to go through that. We had to go through that in terms of trying to protect our businesses. Put in place a furlough scheme. Defer tax, access government funding where it was available. In terms of the react phase. That hopefully is, to some extent, the worst is behind us. We think it is based on those confidence levels that we've just shown from the capital markets in terms of the sector. That then takes us to the resilience phase, which we think we're in now, although to some extent, these things do overlap, and things will undoubtedly change as the government roll out different measures. But in the resilience phase, we think it's very much about adjusting business operations to the current environment, which of course is undoubtedly different to what we've seen before. And then, into the realise phase, which is probably, next calendar year and beyond now. And that is about adapting businesses to the new normal. In the sort of current realise phase, people are trying to forecast and plan as best they can. That's not easy. In the realise phase, I think there's a lot more modelling, scenario planning and adapting of business models. So we'll just look at resilience and then realise in a little bit more detail. So with resilience, we've sort of divided it into 7 areas, which you can see on the chart there. So we've got, in terms of property and premises, clearly, a lot of our manufacturing clients have had to adapt pretty quickly with one-way systems, safe working practices, reduced occupancy levels. And then, in terms of the sector, we've got the whole debate about premises and offices and what do they look like. If that's something that's very pertinent to us, we've got 22 offices around the country. They're all leased. They're all going to come up at different points in time. And we don't know, yet as to whether we're going to need quite as much property as we've had in the past, how we're going to use it. We've got one lease coming up to an end shortly, and we're thinking about a smaller property. We're thinking about a property that's probably got a different configuration and layout, maybe a little bit less open plan. So there are going to be a lot of changes in terms of property, and that links to people and health and safety, which has clearly been paramount in terms of health and safety and well-being of people, and then financial. I mean, not just the government backing. I mean, there are government loans, and now there's a government equity scheme coming into place that will help, but also private equity investors are still very interested in the sector, and the pandemic doesn't really seem to have put them off. I mean, they've decided that it's so fundamental to the economy, this sector, and there's good returns to be made. There's still a lot of equity that's available to companies in the sector. Equally, companies have got to embrace the sort of legal and compliance changes. We've got a lot of new kind of law and guidance coming into place. And then, maybe the sort of biggest changes, suppliers and customers on the sort of bottom left there. So with suppliers, talking to our clients, we've seen clearly a lot of disruption in the supply chain. We've seen, longer lead times, we've seen shortages, we've seen price increases. All of that needs sort of quite a lot of rethinking and re-examining. So I was talking to a client the other day. They do engineered timber products, and they were saying that roughly half of their raw material, and they've seen big price increases in terms of timber. Roughly half is through dealers and merchants, and roughly half is direct from the mills. Most of it sort of coming from Sweden, and they're thinking that they will probably go more direct. They want to take more control over the supply of that material. They can probably get better terms, with the mills by going direct. So that's how they're thinking about adapting their supply chain. Another client that imports smart products for the home, so sockets and plugs and similar devices. All of their product comes from China. So they design, they outsource the manufacturer. They sort of manage the quality. They've had disruption to their supply chain. They're thinking about dual sourcing with Eastern Europe, so they'll still continue to have Chinese supply, but they'll also look to find a sensible source of product that can meet their quality standards in Eastern Europe. Others are talking about onshoring. And I think with supply, a lot of supply chains are very complex. They're slightly opaque, and organisations are not entirely clear on, where a sort of complex myriad of products are coming from. So we think, more data analytics are likely to look at that supply chain and identify the source of products. So we think there'll be a lot more kind of data and sort of science coming into the supply chain. And then turning to customers, I mean, clearly this, situation has made communication paramount and a lot more sort of digital communication. We've seen the rise of e-commerce. We've seen a big kind of increase in that, particularly for some of the manufacturers' customers, routes to market through merchants. And the sector, has been slow to adopt that. I mean, it's lagged behind retail in terms of e-commerce. So that, will change the routes to market in a positive way. E-commerce, of course, as retailers found out, does come with consequences. So, more transparency, easier for people to shop around, easier to do those price comparisons, kind of very different from the sort of opaque rebate structures that merchants and suppliers and manufacturers have in place. And that in turn, probably again leads to some of the lessons from retail around customer loyalty. So, better availability of products, choice, delivery, and just greater customer service. So one merchant that we're talking to is saying that they're going to do a lot more testing and certification of products, so particularly drills and those type of products that they sell, offering that as a service. Another is saying that a lot more on-site storage, so nuts and bolts and consumables. On construction sites, they'll have bins and lockers that the workers can go and access. So we think there'll be a lot more kind of service coming into that. So that's resilience, and then turning to the realise phase, the sort of grey part on our diagram. I mean, these, we think, are the themes that have been around for a long time, actually. We've been sort of talking about these things. We've been chatting to our clients and contacts about them over the recent past, and they're going to continue. Some of them have been accelerated a little bit through, like, for example, e-commerce in terms of technology. But just to pick on a few of these, skills, there's still a skills gap, there's still a skills shortage in many manufacturing businesses, and that's going to need more training and academies, and perhaps to some extent automation will have an impact on that. In terms of sustainability, we think that is probably going to be one of the biggest ones. I mean, driven on the one hand by regulation, on the other hand by ESG sort of investor criteria, where investors want to see more kind of demonstrable environmental, social, and corporate governance in businesses. And so, some kind of examples there. I was talking to a wallpaper manufacturer earlier in the week, and they sort of secured their supply chain quite early on during the pandemic. And they've gone from, they've basically eliminated vinyl, so they've gone to paper only in terms of their product. And now they're looking at a kind of solvent-free, self-adhesive product rather than the more traditional paste. So those type of developments we think will continue. Talking to another company that reprocesses bottom ash into aggregates, mainly used in roads, and they've just seen a massive increase in demand. So they're building a new plant. There is a big increase in demand for those recycled materials. So we think that's going to continue. We think we're going to see more regulation driving, for example, integrated solar roof panels in buildings, air source heat pumps, and as we move towards that trend of net zero buildings, clearly that means different product opportunities. They'll need ventilation, they'll need different products. So it doesn't in any way kind of reduce the sector. In many ways, it creates more opportunity. In terms of building safety, we a lot of the work that MBS are doing around product standards and categorization, we think is going to have a big impact there, where you can, specifiers can identify, the product with more clarity, the audit trail of the product. And also we think innovation is going to have a role to play. We're talking to a company later in the week that's come up with a sort of liquid-based insulation product to go in between panels. So we think that some of these are going to be linked. Innovation is going to be a factor in that building safety as well. In terms of technology, we touched on data analytics, we touched on e-commerce and digital. Building information modeling, is going to continue. This whole situation kind of has put a much greater focus on collaboration in the supply chain, and having that BIM, an ability to get those product, sort of production and efficiencies into the supply chain, into manufacturing, and making it easier to collaborate with other players, is going to be a big factor. And probably lastly, the one to pick out is just government support. The government, this continues to be a sector, where they've got a lever to pull in terms of economic recovery. Be that housing, with build, and easier planning regulations, or simply, infrastructure spend. They are the largest client for construction, and will continue to be. They'll bring in some measures. Not all of them are going to sort of hit the mark. I mean, I think the Green Deal, probably maybe distorts a little bit in that it's short and sharp, and it probably has some talking points around it. But government measures are going to be a big factor for this sector, and all of that, we think, is going to lead to more consolidation. It's going to lead to M&A, mergers and acquisitions, in terms of perhaps on the one hand, getting some more digital capability, on the other hand, maybe sort of acquiring BIM capability. So we think M&A, is going to come out of these areas.
Yeah, just to add to that, to John's comments there, clearly M&A can accelerate access to those new markets, products, services, and technology and innovation. And clearly, synergies on acquiring businesses, synergies will be key to a successful acquisition. And synergies can come from mostly sort of commercial synergy rather than sort of operational synergies, what we're finding. And the other likely drivers of M&A and Rethink are succession issues of succession for a number of businesses in the marketplace. And there is, as John says, there is ample cash for deals and new funds for growth as well. Conscious of the time, so I'm just going to quickly run through the next couple of slides, if I may. Just wanted to quickly touch upon so the deal volumes and valuations that we are seeing. This is another 10-year graph that we have here. As you can see, deal volumes, which represented by the bar charts, have increased over the years, mostly with manufacturers taking a large proportion of that. Multiples, which are the valuation multiples on businesses applied to EBITDA, a measure of profitability. We think currently they're just below 7 times on average, but clearly different sectors, subsectors have demand different types of valuation metrics. This year, because of the COVID, M&A is down, but we are seeing a bit of a surge in M&A activity right now. M&A teams are busy up and down the country, and we have seen a huge increase in well-funded acquirers talking to us about their acquisition criteria as well. And the last page, Lee, I promise, some M&A predictions that we're seeing. We think that there's going to be an increase in corporate carve-outs as corporates realign their strategies for the new normal, and there will be businesses out there that they will want to carve out and focus on certain other areas. Infrastructure will be a key driver for demand for anything related or exposed to the infrastructure market will be quite a strong business for acquirers to buy, and will demand higher multiples as well in turn. We touched upon the tech-enabled and green aspects of the building products market. I think that will be a key driver as well. So businesses with anything tech-enabled, from automated plants, for example, to data analytics, where they can collate, analyze, and make decisions upon data, will be quite attractive in the marketplace. We do think offsite manufacturing, demand for offsite manufacturing businesses will increase, which will be helped by the government sentiment currently. And unfortunately, we will see a bit of stressed M&A out there, given the current climate, but there are plenty of turnaround houses in the UK. It's a very sophisticated market, which will provide a solution in those cases. And clearly, private equity, we think that will focus more on bolt-ons on existing businesses rather than new investment with low risk criteria. So the last couple of slides have run through really quickly, Lee. Just conscious of time.
No problem at all, Mithun. So thank you to you and John. Obviously, we can cover more in the Q&A session later on. So thank you very much for your time.